My name is Velina Tchakarova, and I'm the director at the Austrian Institute for European and Security Policy based in Vienna, Austria. My work includes research, consulting, and lectures on the global system transformation and the geostrategy of global and regional actors. This podcast is produced in partnership with Bharatvarta, India's leading podcast on politics, policy, and culture. And this is the final episode for this year, which is why I have not one, but two very special guests. Jeff Snider is head of global investment research at Alhambra Investments. He has become famous for his Eurodollar university lectures and asserts that even to this day, central bankers don't fully understand the workings of the Eurodollar system and its implications on the global supply of US dollars. My second guest is Emil Kalinowski, CFA, and he is employed in the metals and mining industry, writing about how socioeconomic and geopolitical trends affect the supply, demand, and price of base and precious metals. His present focus is also on the 2007 malfunction of the monetary system and its continuing disorder. So Jeff and Emil have a podcast called Making Sense, and I can really recommend it to you. Welcome to this podcast, gentlemen.
Thank you, Velina. We're very happy.
Yeah, absolutely. Can't wait to get into all the details behind the Eurodollar and how it affects the rest of the world.
And in order to do so, we need a little warm-up. So my first question is a very basic one, and that is, what is the Eurodollar system? Could you give us a very short historical overview and also present us with the current state of affairs, specifically given the fact that political stakeholders, in fact, do not have any idea about it?
Jeff, please condense 177 episodes into about 60 seconds, okay?
I was going to say a brief overview is usually like 4 or 5 hours, so yeah, we'll do the brief of the brief of the brief overview. Essentially, okay. Eurodollar itself is, the term Eurodollar means not European or anything like that. It means Euro means offshore. So essentially, it's a currency system largely denominated in US dollars, but run by global banks that engage in all sorts of currency transactions. But again, offshore, which means outside not just the United States, but outside most regulatory jurisdictions. These are global banks located in the city of London, the Cayman Islands, Tokyo, all over the world that essentially engage in monetary trade with not really any money in it. These are virtual currency ledger balances that are traded back and forth in an interbank format where, global banks are financing trade, financial flows, basically everything that you would want a global reserve currency to do, except it's this offshore US dollar currency. So it's not really the US dollar. It's an offshore, outside, separate bank-centered monetary system that has undertaken the roles of the global reserve currency. And it's been doing this since the 1950s, and it really took over from Bretton Woods in the 1960s in sort of an ad hoc, behind the scenes kind of way. So authorities and central bankers around the world really haven't played much of a role in shaping or influencing what goes on in the Eurodollar system. And that includes that when it broke down in August of 2007, creating the global financial crisis in 2008 and 2009, which very briefly, that was not a one-off crisis in 2008, 2009, which, this global dollar shortage has continued to this very day. So the brief history is that we have offshore money, outside regulation, central banks not really involved. Central banks really don't study or even care much about it, at least they didn't. And it broke in 2007 and has never been fixed.
That's the key, Velina, is that when we say offshore, it's the light regulatory touch, right? It's in the Cayman Islands, but it doesn't involve any people in the Cayman Islands. The regulators say you can do whatever you want or lightly regulated, just make sure all your customers are off our shore. Same thing with the City of London and all the main advanced economy money centers. It's this light regulatory touch, and there's supposed to be a firewall. Whatever you banks are doing, that's fine. It's got, just can't touch British citizens in the city of London, right? But guess what? Bankers are interested in making money, and they're very creative in making ways and making that money get through that firewall. And that's part of the big story, is that eventually this Eurodollar offshore non-national currency system took over and infiltrated and started to fund global economic activity far, far, far more than the national ones onshore did. And people during the 60s and 70s were commenting about it. And in the mid 80s, they were writing, wow, this is out of control. Maybe someone should be put in control of this. Shouldn't we look after this? And Jeff can explain why this was never really looked after or never put under control, if it even could have been. And I suppose everything would be fine. It was this creation of money, and global economic activity was growing, fine, fine, fine. But all good things must come to an end. And they did in August of 2007. And ever since then, we haven't had enough money being created by these offshore centers to fund the level of economic activity that we've become used to for 3 or 4 generations. That's the problem. That's why the last 14, 15 years of economic activity and growth has been awful.
Okay, but then of course I have to ask for the European audience, what is it got to do with Europe and the euro currency? Is there any link to it? And could you give me also an example, for instance, with the great financial crisis, whether it also played a role in terms of, once when there was a contagion throughout the whole financial and economic system, whether it had also whether it has played a role for saving the banks?
Well, Velina, it didn't play a role. It was the global financial crisis. The global financial crisis was essentially the Eurodollar system breaking down and leading to basically a textbook monetary panic all over the world. That's how it became a global financial crisis, because the Eurodollar isn't really just a dollar. It's not just about the United States. It's a global reserve currency. And the banks who operate in that global reserve currency system include a healthy portion of European banks. So if there's a problem in the Eurodollar system, that means there's a problem in the banks in the system, which includes a healthy dose of European banks as well as banks all over the world. But even so, regardless, the fact that it's the world's reserve currency that goes into, that had this major breakdown and crisis, meant that there was not going to be any place that you could hide from it. If you have a global monetary breakdown where that money is absolutely vital and crucial to, as Emil said, economic growth and financial health all over the world, you have a breakdown in the reserve currency. That's not just a problem for America or American banks. It's a problem for Europe and European banks, because the European banks, like the American banks or Japanese banks or Cayman Island banks or wherever, they're the ones doing the monetary system. So the monetary breakdown had no borders. It wasn't like a dollar or an American problem. It was a worldwide problem, because what we're really talking about here, Eurodollar means global currency, global money. So the global monetary breakdown is obviously going to affect everybody who uses that global money or who participates in that global monetary system, which is why you had so much crisis in Europe, in the UK, as well as in America and other places around the world. And it's again, the problem developed again in 2010 and 2011, where the Eurodollar breakdown was kind of focused on European banks who were experiencing repo collateral shortages based on the sovereign debt problems in Southern Europe, that then transmitted to the rest of the world. Because it's a bank-centered system, a problem for European banks or a problem for Japanese banks is a problem for everybody. It's a global network that unless the global network is functioning, it's going to be a global issue.
Jeff, we never answered Velina's question about how does it deal with Europe and where does that name Eurodollar come from? I'm going to throw it back to you. But before I do, I just wanted to highlight a couple of things. First, because central bankers are focused on their national borders and what happens nationally inside, who is in charge of this international currency creating system? Nobody. Everyone says, well, I'll take care of whatever problems there are up to my border. But the currency system is offshore. And then my second point, very quickly, Jeff is saying that this Eurodollar system, the strange thing is the world's reserve currency. But how could it be when we all know the US dollar is the world's reserve currency? Well, actual economic activity, no one's actually trading US dollars. No one's actually moving US dollars back and forth. What's being traded for goods, for services, for financial assets are ledger balances, digits on bank balance sheets. That's what's being traded. And those digits are predominantly denominated in US dollars, but they can be in yen and euros and all manner of other currencies. So what the real reserve currency is just a bank balance sheet, a ledger balance, a checkbook that we're all used to, but on a much bigger wholesale level. Jeff, I'm throwing it back to you. 1955, the Soviet Union, Midland Bank, the Eurodollar. How did it happen? What? We don't know.
We don't really know. That's right, Emil. But we know that there was a continental US dollar market at some point in the 1950s, which is where it acquired the name Eurodollar, a term that was coined by, I forget who it was at the Financial Times in 1960s, when they said, look, there's this robust bank-centered US dollar system developing in the latter half of the 1950s that has started to undertake all the roles of a reserve currency. What is a reserve currency? A reserve currency is essentially a monetary intermediary between vastly different systems. So if you have a common currency that's available in all sorts of places around the world, you can then easily and fluidly and efficiently transact between these very different places. So it's a very useful tool. And people think, and people have been told, and people have been led to believe that the US dollar has been the successor to the Bretton Woods system. And that's only the case, as Emil was just pointing out, in terms of the denomination. We call these things the US dollar, but there's, as he said, there's really no dollars here. These are banks trading essentially what's called money of account or ledger money or ghost money, where it's fictional currency that banks accept. So it's a US dollar denominated, but it's really bank money. It's really funny bank money or virtual bank money. And because it's been offshore, because it's been, as he said, lightly regulated, or the light touch of regulators, it's kind of developed its own ecosystem to take under and perform these monetary roles of a global reserve currency. So getting back to what you were saying, Velina, why do people in Europe care? Because this is the world's monetary system. It's really, it's called Eurodollar because of where it started, but it certainly didn't stay there. I mean, it proliferated all throughout the world because the Eurodollar system in its heyday was really good at performing these roles of a reserve currency. It was really excellent at doing that just in the nick of time when the global economy started to grow tighter and globalization started to become more and more of a general theme around the world. In fact, you could make the case, and I would make the case, and I think Emil would agree with me, that without the Eurodollar system, without this global Eurodollar money, we don't have the globalization wave of the last half of the 20th century. Those two things all go together. So if we don't have Eurodollar function in the 21st century, certainly the 2010s and 2020s, global economic growth that depends on tight cooperation and globalization, that becomes not just impractical, but maybe even probable to the point of it's a really big issue, not just for the US, not just for Europe, but for pretty much everybody.
Well, I have several questions that are immediately arising from these statements. First is, was actually the Eurodollar system accelerated following the collapse of the Soviet Union? Was the Soviet Union incorporated within this system at all? While knowing that, of course, a lot of these networks were actually globalized following the collapse. What's the case with the Soviet Union before 1990?
Before 1990, yeah, the Eurodollar system was sort of, I mean, one of the origin stories of the Eurodollar was that the Soviet Union, fearing confiscation of American authorities during the immediate Cold War, the early Cold War period, decided it would rather hold dollar balances because it needed dollars to participate in global merchandise trade. It decided it would start holding those dollar balances in European rather than American banks or even Canadian banks. So the Soviet Union and Russian money has been a part of the Eurodollar system. Of course, there's been there was all sorts of political intrigue, Americans trying to keep the Soviets out of the dollar system using, various sanctions and various political levers that they've pushed. But by and large, the Eurodollar is the global reserve currency system. So anybody who's trading in any global fashion, if you're involved in the global economy, you're going to need to connect to the Eurodollar system at some point, even if it's some kind of clandestine sort of way that I think the Soviets were forced into before their collapse in 1990. It was sort of tangential. It was sort of, hey, let's try to find a backdoor way to acquire US dollars in whatever way we possibly can by doing business with this banking system that can then connect to the Eurodollar system. So there was always that connection, but I don't think it was ever enough for the Soviet economy to truly participate in the way that certainly the Russian people probably wanted. But it was, if you're in the global economy, there's got to be some Eurodollar connection somewhere.
Mm-hmm. Jeff, can I expand on that point? And you tell me if I've got this correctly, just to help the audience sort of understand where does this money come from? So originally there were actual dollars in Europe, and the idea maybe the Soviet Union earned it through trade, or there were American service members earning dollars, and so they were depositing them in banks. But what do banks do? Once eventually someone got the idea, you know what? I can start making loans and other investments based on these dollars. And what do banks do? They say, I promise I'm going to be able to make good on this. And that's how we've started, from this pile of dollars to banks saying, I promise I can get the dollars for you. We can do it. Promise. Trust me. And it developed from there, this promise, this trust that they will be able to get the dollars. And eventually they got rid of the dollars, but that's how they were able to create dollars out of thin air from this small little seed after the Second World War, wherever those actual dollars started from. So Jeff, tell me because I'm trying to get the audience to understand how money is being created literally out of thin air. It's a promise. It's just confidence that I will be able to, as a bank, to provide those dollars. And then it just got carried away after decades. Did I get that generally right?
Yeah, and we're also skipping a whole lot of steps here in the interest of time and brevity. That, look, this is a comprehensive system. It's a comprehensive ecosystem that's not just about currency. It's about securities trading. It's about financial flows. It's not just about merchandise trading. There's all sorts of things that banks do, and all sorts of ways that banks engage in this type of behavior, which, as Emil just said, is they're creating US dollar denominated resources that doesn't involve actual physical currency. In fact, that's one of the reasons why this offshore system developed and proliferated as it did in the 50s and 60s, because physical hand-to-hand currency or gold bullion is very cumbersome and inefficient. It's much easier to have an electronic payment system based on a common shared ledger than it is to have to wait for somebody to ship in actual physical cash, or for the Soviet Union to get its hands on physical Federal Reserve notes and then deposit them somewhere and then have them leak into the system somewhere else. The banking system recognized that there was a need for these US dollars all throughout the world to engage in this more closely cooperated globalization across the economy. And it decided that it would finance or fund or make the monetary resources, the currency resources available for that system in the most efficient way possible, which was essentially, again, skipping a lot of steps to create these US dollars out of thin air, because they're all based upon this ledger system.
Mm-hmm. And foreign banks are, in fact, obligated to pay in US dollars when the deposits are withdrawn. They cannot pay, for instance, in their national currencies.
Well, you can do whatever you want. The bank will charge you an exorbitant fee for doing something like that. But yeah, if you have a US dollar deposit as, say, a European citizen of any country in Europe, you have a US dollar deposit, a de novo deposit with a whatever bank, the bank is essentially obligated to pay you in US dollars, but the bank knows when it set up the deposit that the chances of you actually asking for physical cash are so very low, it's not really a problem. And even if you did want physical Federal Reserve cash, it would be happy to deliver it to you for whatever fee is specified when the account was set up. But I think that's a key point. I think that's what Emil was trying to get at here, was that there's no physical cash here. There's no need for it because nobody actually uses or wants it. Hand-to-hand currency really fell off as sort of a main form of monetary exchange back in the 1910s and 20s. And by the 1930s and 40s, these interbank markets had become the primary means of monetary flow throughout the, as a lifeblood through these national economies and the international economy. So in one sense, the interbank nature, this non-currency virtual ledger system of the Eurodollar system took what was already happening in national banking and took them a step further to fill the void left over by the inherent flaws in the Bretton Woods system. So, money and currency itself has evolved, as have banks, and the way that banks interact with one another, which gets us back to the, one of the other main points that we talked about here, light regulatory touch, and why aren't central banks involved in this? Because it was banks that had done all of these things independently of regulatory scrutiny, independent of statutory authority in all these national places. They were basically given a blank canvas in which to rewrite how money and banking is done, and they did it. They actually did it. And when central banks started to realize in the 50s, 60s, and especially the 70s, that this stuff was going on out there in the Eurodollar system, by then it was too late. It was too late to forget putting a stop on it. It was too late to really understand deeply what was going on. So essentially, again, skipping a lot of steps here briefly, the central authorities throughout the world just threw up their hands and said, okay, this is what happens in the Eurodollar system. It seems to be working. It seems to be working very well. We're just going to take a very hands-off approach to it and just let it do its thing. We'll try to influence it where we think our national interests are involved. But by and large, for the 80s, 90s, and middle 2000s, it was see no evil, hear no evil, speak no evil.
I have the following question. What happens if United States stop running deficits and can no longer back the US dollar as, or let's say the Eurodollar system as the global reserve currency system? What happens? Can the Eurodollar actually crash, and under what kind of circumstances?
Well, the Eurodollar did crash, number one, but number two, it's not really tied to the merchandise trade. That's kind of a traditional way of thinking about, capital account deficits and things like that. These Eurodollars are created independent of the US current account or merchandise deficit. Now, the merchandise deficit does contribute to the amount of dollars that flow around the world, but the Eurodollar essentially fills in the gaps where it needs to, or at least it did before 2007. So financial flows and merchandise flows outside the United States or outside the current account deficit of the US, there's sort of independent variables here. So if the US, for example, in the middle 2000s had run a lower current account deficit, a lower merchandise deficit, it wouldn't have made a difference at all, because the global banks that were creating these Eurodollars from out of thin air would have just created more than they would have otherwise. So the two things are kind of independent, even though, if you could look back in historical scholarship in the early days of the Eurodollar system in the 40s, 50s, and 60s, there was a lot of attention paid on the growing US merchandise and capital account deficits, because back then they still thought of the monetary system in very traditional terms of US dollars physically flowing outside the United States, when that was already not the case. So merchandise trade, Eurodollar system, the availability of US dollars, what are called US dollars outside the US, these are really independent factors.
So does it mean that we can have another national currency, being pushed forward as the global reserve currency? Let's say Chinese yuan is the next global currency, but we still will have the Eurodollar system remaining intact.
Yeah, the Chinese yuan, the Chinese don't want that either. But there's various capacities that the monetary system needs to undertake, and various roles that need to be performed in order for it to take over as a reserve currency. You can't just flip a switch and say one day, "Hey, Chinese yuan is now the reserve currency." It doesn't really work that way. As I said, reserve currency is essentially an intermediary. It's a middle currency between a lot of various different systems. And so it has to be available and acceptable in all of those places. And the way it becomes acceptable is, various reasons. The US dollar was acceptable because everybody thought US dollar, post-war era, those two things go together. But the way it's made available in all those places, that's really where the secret comes in. That's the Eurodollar system and all of these banks operating within it that were able to redistribute and spread the monetary resources all over the world. So if the Chinese wanted to make the yuan a reserve currency, they've got a whole lot of work to do, a really very substantial, significant job ahead of them to develop the infrastructure, even assuming they could get other places to want to use their denomination as a reserve currency. They still have to develop the infrastructure to be able to get their currency in all of these places in sufficient volume and dependability and predictability that it's acceptable in a wide enough, across a wide enough area of the world.
But let's take the worst case scenario of a kind of a violent systemic decoupling that's being launched by both the United States and China. In the long run, decoupling that would also mean that this kind of globalized networks would be actually separated. What happens to the Eurodollar system in that case if China is completely decoupled or decoupled to a great extent from the global economy, financial and monetary system?
I don't know how the Chinese would accomplish that because they have more of a need for US dollars than anybody else around the world. So their dollar problem is essentially they have dollars and they need dollars. But assuming that's the case, I mean, historically speaking, that's really kind of what modern economic history says, is that we don't have a single global reserve currency. Usually there are currency blocks. In fact, the Eurodollar system developed out of, essentially what was a British global trade bloc. So it, maybe just naturally as the Eurodollar system breaks down as it is, regardless of political consequences or any kind of political struggles, that's maybe where we're going anyway. But I still think, the Chinese have a major hurdle, even trying to create a regional or specific currency block where CNY or the Chinese yuan operates as the, much narrower, but, regional currency, reserve currency. They still have a lot of work to do in developing the infrastructure that is already available to the entire Eurodollar system. So that's one reason why, even though the Eurodollar system sort of began malfunctioning almost 14 and a half years ago, it's still the only one around because it is that substantial of a task to try and replicate and replace it. To offer a realistic alternative to the Eurodollar system means a whole lot of work that I don't think most people really appreciate what's involved with it. And it's something that, that you can't do it overnight. It's a long-term project. It's a very long-term project in all of the various phases that need to come together in just the right way in order to work. And so the Eurodollar has, decades of experience, decades of practice already built up inside of it, even though it doesn't really work all that well nowadays, but at least has all of the minimum requirements are being met by it. So to have a realistically competing alternative currency system is, it's a huge Herculean task.
It's a complex system. It's almost a natural ecosystem that's grown out of human affairs and society and transactions. And I think you can't just build it. You have to let it grow. And that takes a long time. I would think you would have to de-link, go into reverse, go to a much simpler state, national currencies, currency blocks, and then see it build up naturally from there. I would imagine it would be very difficult to recreate anything comparable to a natural ecosystem. Are humans able to create natural ecosystems just on the fly? No, it would take years, decades.
Yeah, Emil, your point is essentially, let's say we wanted to build a competing internet. Would we do it tomorrow? I mean, the internet wasn't something like we just, a government put together a blueprint and started building it. It was sort of thrown together through various natural processes and organic capacities over time. The Eurodollar looks like a computer network. When you really break it down, this global monetary system looks like a computer network because that's essentially what it was built up from, the capacity to communicate. So essentially, that's the kind of the task that you have is you're essentially trying to say, hey, let's build another competing internet from scratch. And it's not so easy. It's a huge task.
But still, of course, we should consider also scenarios where United States and China would not come along, right? So I'm interested in finding out what happens then. The Eurodollar system thrived and is thriving because of globalization. But in reality, these are US-led networks. And of course, the last 30 years, witnessed unprecedented globalization, not only in the financial world, in the financial system, or in the monetary system, but in all other relevant socioeconomic systems. So I'm interested to find out what are the main vulnerabilities of the Eurodollar system amid growing geopolitical turbulences, amid emerging bifurcation of the global system, and also given the possibility of a systemic decoupling.
Well, I would disagree that these are unprecedented globalizations. I would say that they are very precedented. We've experienced, from my count, 7 globalization cycles since the 1800s. And so we've seen this before several times. We've seen unprecedented, incredible transportation, communication, interaction, integration with the global brotherhood and sisterhood of nations. We've done it over and over and over. And it's a cycle that breaks down and goes into reverse. It goes too far and people rebel against it. And so this is just yet the next vintage of this globalization cycle that we've experienced for 200 years. And the Eurodollar system, as impressive as it is, can absolutely be controlled if the politicians have the will, just like with previous events. So national emergencies would focus the minds of politicians and the populace to implement drastic policies. I'm thinking perhaps financial repression, capital controls. Those sort of policies could put everything into a pause, into a deep freeze, into reverse, and break down the system. And then from there, a new one would be created after some period of time, because humans, we love to make money. And if bankers can make money out of thin air, they would come up with a way to work in the new system eventually. But that would be the key. Politicians seeing some national emergency and implementing laws and regulations that constrain the free movement of capital and put banks under explicit political, direct control. That I think could reset the system.
Now, I think that's an important point too, Emil. What you're talking about is essentially a clean break from the way things are. In other words, that right now, I think there's this perception that politicians in the United States in particular are in control of the Eurodollar system as it is right now. And that's not the case. In fact, as we said, they've been taking a very hands-off approach to it ever since the beginning. So we're talking about 60 years where everybody thinks the US dollar is controlled by the Treasury Department or the Federal Reserve, but in actual practice, it's these banks operating around the world. So what Emil is saying is that, look, if push comes to shove, then politicians can intervene in a way that they have never during the Eurodollar history before. And even that would be kind of difficult because you're talking about banks operating outside of their own jurisdictions. So we're talking about a radical shift in political behavior as it pertains to money, which would have to, we're talking about something that precipitates that. It would have to be something substantial. But as it stands, even today, the Federal Reserve, the Treasury Department, authorities in Europe or around the world, they really don't have much influence or really any influence on the Eurodollar capacity and what's going on inside of it right now, because they really don't have any mechanism to understand it, let alone influence it. So if they want to take control, they're going to have to do so in very explicit and very serious ways.
Just like we did in the last worldwide depression: tariffs, trade wars, capital controls, bank regulations, bank holidays, confiscation, devaluations. Yes. It would have to be an intense political involvement in the economy and the financial system, but they can do it. Do they have the will? Do they have the purpose? Do they have the motive? The courage?
The courage. Do they have the capacity? Do they have the wisdom? Do they have anything besides partisanship?
Well, and the political price will be too high. That would mean that
huge.
no politician would actually be willing to pay such a high price to take this kind of decisions.
That's why I'm suggesting that it would necessitate a crisis, a national crisis whereby everyone starts rowing in the same direction instead of fighting with each other, because there's a much bigger threat outside of the boat. And so once everyone is focused on that, then they could start working together. I was talking to Jeff the other day about the number of laws and regulations that Franklin Roosevelt passed in his first 100 days. And because it was a national emergency, I think it was 150, 160 plus laws and executive orders in the first 100 days. And compare that to what's happening in the United States now, where it's taken months for them to pass a single infrastructure bill. I don't even know if it's passed yet. No, so that, but because then focused alignment, national emergency, it could be done. Never waste a crisis. I think someone said that. It was either the Mahatma or Emmanuel, what was his name?
Rahm Emanuel,
Jeff?
yeah,
Rahm Emanuel.
Yeah. And I think, Velina, that's part of the problem we have too in this modern, I mean, going back to Emil's earlier point that globalization, these periods and cycles of globalization, as his research has shown, there's usually a monetary component to it, monetary evolution, monetary cooperation, an evolution or a step in banking. These things are all closely tied together. And in the past, that was easy. Those factors were easy to identify because money was relatively simple. Pretty much everybody knew what was going on. The problem that we've had in the Eurodollar era is that it's hidden. Not only have authorities taken a hands-off approach to it, if you say the term Eurodollar to the person on the street, they have no idea what you're talking about. So money today is very remote from personal experience and even political experience. The politicians don't really understand how the system goes either. So to Emil's point that he's making now, it's hard to make the case that drastic steps need to be taken because hardly anybody knows that this monetary system exists, let alone that it's malfunctioning. So it's difficult to generate the kinds of political capital that's required to take even a minimal step to say, hey, we should even look at changing the reserve currency system because it doesn't seem to be working. Most people will be like, what are you talking about? The US dollar seems fine. It goes up in value, which is another point of confusion. People don't understand what drives the US dollar, how it works, what this Eurodollar is, how it works, what's really going on in it. So if you can't connect the dots between what's going on in the monetary system and connect them with undesirable political and social outcomes around the world, the task becomes even that much more difficult because, again, nobody's really making sense of what's going on and what's really going on in the world. Instead, we're all dazzled by QEs and monetary policies and things like that so that we stop asking the real questions, which is, how does this system actually work? And is it really working for everybody involved in it?
Velina, forgive me for jumping in, but I just wanted to underline, circle, and highlight what Jeff said about the relationship between money and globalization. He said that it was closely related. I will go so far as to say that it is globalization. It's indispensable. It is the first step to globalization. It's the surplus of money, the creation of money in advanced economies, advanced money centers that then begin to flow over the borders, because if there's so much money, then you start globalization. Then you start all the incredible things, investments in technology and communication, all that comes with money. And the way we can identify that this is true is because each of the globalizations, except for World War I, ended when there was a crisis in an advanced economy money center, when all of a sudden what people believed was money good, some derivative near money, what everyone was counting on to be able to turn into gold or silver or banknotes, all of a sudden they realized, oh, this is no good. This is a mortgage-backed security, or this is an investment into the country of poor ice, which doesn't even exist. And so it's no wonder then that globalization ended in 2008. Foreign direct investment has flatlined since 2008, since the global financial crisis. If you look at global trade, same thing, sideways. So money comes first. That leads to globalization. And in our case, the people that are the banks that are creating money on which the global economy runs find it way, way too risky to do so. And we're all suffering for it.
Okay, when will the next Eurodollar system crash happen and why?
I was thinking Monday, Jeff.
I was going to say tomorrow, but yeah, tomorrow's a Saturday, so maybe. Well, the Eurodollar is open somewhere. I think it's a question we get a lot, right, Emil? I mean, everybody wants to know this thing doesn't seem to work, so when is it going to just fail? And the answer might be that it doesn't. It might be that we've witnessed a 14-year period where it's malfunctioned, but as I say, it's at least good enough to keep the lights on, so it kind of keeps going. And as I said earlier, there really is no plausible, realistic alternative to it. So even if it functions minimally and occasionally in intermittent periods of crisis, it's what we have, and it has shown the ability to at least continue itself for almost a decade and a half now in this current decrepit state. So it may be that the thing just doesn't fail. It might just be it ends with a whimper. Maybe someday some politicians become smart enough and say, hey, let's connect some of these dots here. We've got deflationary currency. As Emil said, globalization and money are tied together. What's going on? We have no global trade anymore. They start putting all of these things together and actually fix the system. That is possible. It could happen. So it may be that, the system, the Eurodollar system doesn't just crash. Maybe it just continues on for a while and we get wise and it just ends in a whimper and something else takes its place. Well, that doesn't preclude the possibility of some kind of violent end, nor, which might be an equally troublesome case where we do identify that the Eurodollar system is breaking down and that it is in everybody's interest around the world to replace it. But that replacement process is very tricky, very uncertain, and a lot of things can go wrong. As I say, where we are now in A going to a B, which is a better system, between A and B, a whole lot can go wrong. So it might be that the Eurodollar system doesn't crash. It just comes into a whole lot of trouble as we try to get out of it and move into the next system, which may be, as you said, Velina, it might be regional currency blocks. Maybe that's the answer to this, going back to a more historical boundary, more historical boundaries where we don't have a unified currency system throughout the entire world. It might be not as efficient as the peak Eurodollar, but still, maybe that will work better. But there's always that possibility that we're transitioning from A to B, that it gets to be a violent mess. So maybe that's really where the dangers lie. And when we actually realize what's wrong and start to fix it, not realizing that there's a whole lot that can go wrong in trying to fix it.
And I don't want the audience to go to bed tonight thinking, oh, thank goodness, Jeff, that maybe it'll just continue and there won't be a crash. Because that doesn't mean the system can't have an apoplectic fit, as it has 4 times already: the global financial crisis, the European debt crisis, the Chinese foreign exchange reserves crisis, the deglobalization crises leading up to the fit in March 2020. Each of these was preceded by signs, signals in money markets that something was wrong in the Eurodollar system, that there wasn't enough money being extended, enough credit, enough collateral wasn't available, money was getting tight. And it's a little bit like musical chairs. Chairs start being pulled back, maybe one, maybe another, and then all of a sudden 2 or 3, it leads to a panic. And as Jeff and I have been talking about on our show, all this year, we have been seeing signs that we have seen 4 times before leading into one of these fits. So I would say money is getting tighter and the future is less bright than bright. Jeff, what am I trying to say? It's concerning where we are right now.
Deflationary potential, which is never good. And, to take what you just said, even a step further, that, even if we don't have a crash, in some senses, a Eurodollar crash would be the best outcome because it would force everybody to say, let's fix this thing. If the system doesn't crash and continues on for another 15 years, that might actually be the worst case. Because then we're not only are we being robbed of economic vitality through the mechanism that Emil just said, nobody has figured out the answer. If the Eurodollar system malfunctions for another 15 years, that means nobody has connected all these dots. We haven't figured things out. And then what does the world look like politically and socially in that kind of a circumstance where the globalized economy becomes fragmented even more? People are even angrier. They don't know why the economies aren't performing like they used to be. You know, prosperity seems like a distant memory. Even economic booms are, you know, that's something our parents were talking about, not something that our children will. That creates all sorts of massive problems. So in some sense, in a very realistic sense, although as bad as it sounds, a crash might actually be the best option, because then it would focus everybody's attention. It would create a sense of urgency. And that's what really, you know, to Emil and I share this viewpoint that, you know, 2008 and 2009 was a missed opportunity to have done this, to have said, no, this is not subprime mortgages. This is a global Eurodollar breakdown, and the system is not going to heal itself and fix itself. Certainly QE is not going to do anything for it. So let's reform the thing now while everybody has focused on it. Everybody realizes it needs to be done. Let's look at doing a monetary system that benefits the entire world, and let's do it while we have the opportunity to do so. Instead, central bankers and politicians around the world said, don't worry about it. It was just subprime mortgages. We fixed everything, and everybody goes back to sleep. So, you know, there's getting people's attention focused on the monetary problem. However that happens is probably what we need to be looking for. That's that's the best possible outcome here, not another 15-year period where nobody has a clue what's going on.
Mm-hmm. You already mentioned several times central banks, and that central banks do not have a role in the Eurodollar system. But what is the future role of central banks of developed economies in your view? And are we going to end up at some point with a scenario where we would have too central to fail systemic risks in a parallel to the too big to fail kind of scenario of systemic risks coming out of the Eurodollar system crash in 2007, 2008?
Well, you know, central banks, as we said, they know that they're not really part of the Eurodollar system. In fact, you know, they realize that there's this global dollar problem. They don't really understand it all that well, but they're invested in expectations management, which is essentially trying to get people to believe that they've got everything covered. Don't think about these things because we'll take care of them. But as that has broken down, not just in the US, not just the Fed, the ECB is probably even better example, as it has failed in its mandates of creating growth and inflation, or, you know, modest inflation with low unemployment. You know, what has happened in central banks, Europe is the best example, is they've started to look at other things, right? We're not really a central bank. We do these QEs that's about pop psychology. So let's tackle climate change. Let's tackle resource allocation in a very political model. So central banks are becoming more and more politicized themselves, having ceded their core mandate, which, as Emil and I say all the time, people need to realize that central banks aren't actually central banks, certainly not by the traditional definition. They're essentially political creatures that are involved in manipulating psychology, which makes them, you know, their evolution toward the political sphere makes perfect sense, because that's what they actually do anyway. So the less they're able to affect the monetary system and the economy, the more that we should expect them to creep into other areas of society and politics, which is exactly what they're doing.
Okay, then I would like to ask as a final question, because we have a lot of questions from the audience, and I really want to ask these questions as well. What kind of systemic risks regarding the Eurodollar system keep you awake in the night? What is your list of the 3 most significant ones?
How much time do you have?
All the time in the world, given that we are going to move towards another 15 years of Eurodollar system.
Velina, I wish it was, hey, this is the one thing that we could fix, and then everything would be fine. It's really what is right with the system, not what's wrong with it. What's right with the system? It's just there's too many inherent contradictions in how it operates, and it depends upon. In some ways, it came to depend upon, in the pre-crisis era, banks just being stupid and insane, doing ridiculous things. That's the amount of credit growth and risk taking that were required to keep the system advancing at such a rate that it appeared to be stable. So the more unstable it actually became, the more stable it seemed to be. And that's just an inherently contradictory state that's never going to work. So in some senses, we still have that problem. We still have the need for banks to take risks that they clearly don't want to take, because they've realized the downside of them taking those risks. You end up like Bear Stearns, or you end up nationalized like any number of banks in the UK or across Germany and Europe. There's a real downside to having done what they used to do, but the world depends upon banks taking risks that they don't want to take. So there's always this inherent contradiction, this inherent sort of tug of war between what we need banks to do and what they're not going to do, what they might like to do if they could. And the way that kind of works out in terms of the plumbing or some of the details, for one thing, there's a collateral shortage, and repo, derivatives, these are very important parts of redistributing and creating and making sure Eurodollar monetary resources flow around the world that depend upon collateral. And collateral, because, you know, again, we're in this environment where risk taking and risk aversion is more likely than risk taking. Everybody wants to own, everybody can own and only use the most safest and liquid instruments. And there's just not enough of them. So we have a collateral shortage that becomes an extreme shortage during these Eurodollar periods that Emil just referenced, these 4 Eurodollar issues. That, again, we're starting to see signs in the collateral system right now that suggest not only are safe assets in short supply, they're becoming increasingly in short supply, especially as the US government restricts the availability of something like treasury bills, which are the best of the best of the best types of collateral. So underlying all of these things, we've got this inherent problem that's manifested in something like a collateral shortage that, as we've seen time and again, becomes a primary mode of failure. When the collateral shortage becomes an outright collateral scramble or a collateral panic, as we saw in March of 2020, that leads to all of the big liquidity consequences that lead to really bad problems around the world. So top of my list is collateral, as usual. And there are other things as well, just that go along with the money dealers around the world, these Eurodollar banks, they're intermittent risk aversion that's driven by any number of things.
My biggest concern is very broad and something that Jeff writes about often. It's that we're in the 1930s equivalent, and if we don't fix it, it may lead to a 1940s equivalent, because an economic pie that's growing is very satisfying. It's delicious, and it brings everyone to the table, and you can get along with strange people from strange cultures who say strange things. No problem. Everyone's making money. But when the global economic pie is barely growing or not growing at all, well, then you start looking at those strange people and you say maybe it's their fault that this is happening. And you can make good cases that it is their fault. And then it leads from there. So we've switched from an era of cooperation to one of competition. And the longer this sort of depression continues, the more concerning, the more stressful it gets.
Is this the most significant geopolitical link? I mean, this analogy to the 1930s, and we know how it ended with as some analysts say, the Great World War. I mean, given that it's not, it hasn't been consisting of 2, but of 1 continuous World War.
Yeah, I think that's exactly right. This is the story nobody knows. And that's why it's such a big political risk, is because something is wrong. And I think most people around the world, Europe and the United States, wherever you are, China, emerging markets, you realize something's not right. Something changed. We don't know what it is. And that's what's causing a lot of political extremism and social breakdowns, because we know something's not right. Something is very different here, but we can't say what it is. Nobody has any answers. And all that does is feed more and more political extremism, because those on the polar opposites claim to have all the answers. And when you're the only one who claims to have an answer, when everybody's looking for answers, you tend to create a large enough following that it can become a big issue. So, for us, we have a monetary breakdown that explains the economic breakdown, but since it's an offshore shadow money type of breakdown, the fact that nobody knows it's actually there, let alone that it's breaking down, that's the geopolitical question. Is step 1 is identify the problem, And then step two, do something about it. We haven't even come close to step one yet.
We have a lot of questions from the audience. Maybe we can try to address some of them, depending on, of course, on your time and availability, and then we can also arrive at some conclusions. So first question is, why do you need expanding money supply to grow the economy? In addition, there is a question, why can't increasing productivity, deflation, and the visibility of modern digital money take care of a growing economy?
Well, those are two separate questions, and taking
These
the second
are two separate questions.
Yeah,
yes.
this very different question, because this taking the second one first, there is a difference between productive deflation, which is what capitalism and free markets are supposed to generate, which is mass production, economies of scale, where prices come down in all sorts of new goods and innovations and technologies, which is a very good thing. That kind of productive deflation is what we want to see, but that's not what we're talking about. We're talking about a breakdown of the monetary system that creates another type of disinflation or deflationary environment that interrupts free markets and capitalist societies. It halts their economic advance, because getting to the first question, we do need monetary resources because there's always this mismatch between supply of money and demand for money. And there's usually what's supposed to stand in between those is a high degree of intermediation, which is what the banking system is supposed to do, and what the Eurodollar did very well in its earliest days. It matched the supply of money with the demand for money, and legitimate productive demand for money. Now, where it went wrong was that it stopped, the intermediation function broke down, and it just decided to flood the world with money all over the place. But in a ideal type environment, or a better scenario than what we saw in the late Eurodollar period, there is a rising need for money, and you want a dynamic system to be able to efficiently match the supply of money with the demand for money. That's really what we're talking about here, is elasticity, where it's not necessarily money needs to grow at X number of dollars or at X percentage of a rate, that just money needs to more beneficially match supply with demand.
Mm-hmm. Emil, do you want to touch upon, or there are plenty of other questions? Like, if you don't want,
let's go to another question.
Let's go to another one. Isn't the inversion in the Eurodollar futures curve maybe predicting, except of a possible global depression, less freedom when you think of the rising power of governments, regulations, etc.?
I don't know if it's predicting a depression. I would say we're already in a depression. We've been in one for 14 years, but I think it's predicting that the future is concerning, and this gigantic market believes that the Federal Reserve will likely be forced to be lowering rates in the future, not too distant future, because something will go wrong in the economy. So that's what the Eurodollar curve inversion is predicting. And freedom and liberty, I guess that's on the retreat right now. That seems to be, the pendulum is swinging the opposite way. But I don't know how to link the two topics together. Maybe Jeff or you, Velina, can do that for me.
Well, I would say, Emil, is that the perverse part of a deflationary, disinflationary environment that the malfunctioning Eurodollar system has invoked, which the Eurodollar curve, the Eurodollar futures curve inversion is an indication of this rising deflationary potential, is it has created this perverse sort of process where the market, because of the lack of liquidity, lack of money worldwide, and as we said, collateral and safe assets shortages, the market, the monetary system, the banking system, the real economy demands safe and liquid instruments, which is unfortunately government bonds. And so governments have essentially taken advantage of this deflationary wave, the rising prices in government bonds, because the governments are the only game in town. The private monetary system, private credit system have broken down. So the threat to liberty and the threat to political constituencies is the fact that governments have grown exponentially in relationship to their own economies simply because they've been able to. The fact that government debt is so highly prized and at such high prices has allowed them to expand their footprint across not just economic life, but also all manner of social parts of of your life as well. Governments have grown because they think that's the right thing to do, even just in broad, very specific or non-specific fiscal stimulus terms. Think about Japan for the last 30 years. That's what governments do. So they've taken advantage of this deflationary environment that's presented to them by this Eurodollar breakdown. And again, they don't have any answers for it. So they just expand the government footprint all over the place, not just once, but continuously, because it never works. The Eurodollar system never advances. And that's really what the major threat to especially free markets and free economies and free systems are, is the fact that governments think that they're doing good by doing more of what they do and believing that, hey, the market isn't rejecting our debt as we issue more and more debt, so let's do even more of what we're doing anyway, even though it doesn't seem to work. That, I think, is how you connect the deflationary environment, the silent depression, as Emil always says, with the growing influence, the growing intervention of especially federal government authorities all over the world, not just in one place or another. It's pretty much everywhere. And again, we don't know what's wrong. We don't know how to explain what's going wrong. So you can, in one sense, you can understand why this has been the case.
Well, I'm not sure I really want to elaborate on this because it will take another hour, but let's say that this cycle of globalization is, in my view, a little bit different from the previous cycles. Why? Because for the very first time, and I think that we all will agree on that, is that we ended up with a global system that has turned into being a capitalist one. During the previous cycles of globalization, where there was a global power, which was also, of course, able to connect to other parts of the world, the model, of course, of governance was not the one being on a capitalist system. So in a sense, this, of course, now global capital has been actually spread to every part of the world. Take China as an example, take Russia as an example. Everyone, we had in the previous globalization cycle an anti-capitalist model, an anti-capitalist second superpower. You should consider this as a very important, at least in my research, it's a very important factor. Why? Because in this globalization cycle, we also witnessed that there have been losers in the process. Take the developed economies into consideration, and once again you see the middle class as the biggest loser of the process. In a sense, this will have an effect on the rising of many populist movements that we've also observed in the 1930s. Take nationalism into consideration, take Marxism into consideration. All of this is now on the rise once again, except for the fact that we no longer have this middle class, which has been the strongest pillar of democratic systems throughout the last 70 years, since the end of the Second World War until more or less the great financial crisis. On the other side of the coin, take the Asian giants that are now on the rise, China, India, they have very different models of governance. We will observe a middle class on the rise, millions of people who will also develop what? Political demands. And of course, on the top of this system, there are elites which have very different ideas about governance. So in a sense, China, of course, being the excellent case of kind of an authoritarian rule of governance, is going to make sure that this emerging middle class does not end up with similar political demands as it was the case in the United States and in Europe following the Second World War. And all of this, of course, result in this kind of situation where certain freedoms and rights are being actually limited, but for different reasons.
Yeah, I think, there's really what you just said. We have the problem of the middle class in the United States and Europe and around the developed world, but you also have the problem of the middle class that developed from the flow of globalization around the developing world. And yes, the lack of the deglobalization since 2008, the lack of economic growth is a threat to both, because now you have middle class and is shrinking middle class in the US, shrinking middle class in the Europe that are wondering, where did everything go? But you also have this rise of the middle class in all of these Asian emerging market economies that are that are going to want that middle class lifestyle to continue. And if there's any sort of threat to that middle class lifestyle continue or proliferating, that's going to become a very big political question for the emerging economies as well. And so we've essentially had, I think you said it right, Velina, that we've had this amazing upset to the world order, really we're going back to World War I and World War II. The post-war era really scrambled everything around in ways that I don't think anybody has really appreciated, especially over the last 30 or so years since the breakdown of the Soviet Union, as well as you said, China's embrace of their limited capitalist phase that created all of this sort of volatility. And for a while, it seemed to work really well, and it seemed to produce a lot of great prosperity. And I think the question that's on the minds of the middle class in the developed world, as well as the developing world, is, will this type of prosperity or will this type of system continue? And if it doesn't, if there's a threat to it, what are we going to do about it? And that's really the political and social upset, I think, that we tied together with a monetary system, globalization, economic growth, and the lack of answers that are coming from political authorities who don't really understand why or how globalization actually worked and what was really going on, and really what's going on now with the world deglobalizing, lack of cooperation. And if you can't provide answers, as you said, Velina, you've got nationalism on the right, you've got communism on the left. If this is a boom, if this is the best that capitalism can do because nobody seems to have any answers, then why not try some socialism or some other extreme form of because we had a middle class lifestyle and it seems to be threatened or going away. Let's try something different.
For anyone in the audience who would like to get more of this sort of treatment on the middle class and how it's fitting in the macroeconomic picture, I have a book recommendation, Trade Wars Are Class Wars by Michael Pettis and Matthew Klein. It addresses many of the topics we just discussed.
So there are some more questions, gentlemen. Would you like to address them as well? Or, I mean, it's really, I don't really want to push your patience, but there are more questions coming. I suppose that you really touched some nerves with what you've been discussing in the last 60 minutes.
Absolutely.
My time,
look,
yes.
It's just going to say, we realize that what we say is contrary to what people know, what they've been taught, what gets reinforced every day. So, the more opportunity we have to clarify ourselves, or at least, answer some questions, or at least point people in the right direction, I'm happy to do it. I know Emil's more than happy to do it on every occasion that we get. So let's keep them coming.
Okay, so there is of course a question. It was it was predictable, at least in my view, that there will be a question on the future global currency, and there is a question related to the IMF's CDR, whether you would consider actually IMF's CDRs as the next global currency, or perhaps digital currency launched by a central bank. What is your view on that?
The SDRs by the IMF are supposed to be a liquidity format to help supplement the current system, but they're basically worthless. We could get into why that is, but essentially the IMF SDR has the same problem that any other potential competing answer does, which is what we said before. There's no infrastructure for it. It's simply an accounting fiction that's maintained at the national level, and it has very limited, in fact, no real practical use. So if you want to use SDRs as sort of a competing currency, you're starting from scratch. You need to build a new internet. You need to build a new internet that trades in SDRs, and that's really the task before it. And because of that, it's not really a realistic alternative, and it really wasn't meant to be. It was sort of meant to be a supplement to the Bretton Woods system, and then of course that got changed really pretty much as soon as SDRs were introduced. And the other part of it, central bank digital currencies are not really native digital currencies. They're sort of central banks digitizing the way they do things now. For example, think about, the Federal Reserve or the ECB having digital electronic accounts with not just banks, but also individuals. It doesn't really change the makeup of the currency system or the arrangement of how the currency system actually works on a fundamental level. It just changes the appearance of how people are transacting with the system as it already is. Now you can see why central banks would want to develop something like that, because then it sort of maintains the status quo where everybody thinks the central banks are central banks. but it's not really a replacement, nor is it intended to be a replacement to the actual monetary system on a very detailed or a very fundamental level.
The Bank of England in 2014 wrote a paper where they estimated that the money in circulation in the British economy was created 97% by private banks and 3% by central banks. So if we had a central bank digital currency, that's fine, but it's still reliant, at least right now, on private banks participating and having a risk appetite to expand and to lend and to create credit collateral and money into the system. Is that going to change because we've changed the denomination to SDR or something else?
Interesting, also given the fact that China has launched the experiment with the digital currency in several big cities, including Beijing. So it's interesting to also take this into consideration, what you've just said.
I just wrote about this today, which is that central bank digital currencies, when you really take it from the perspective of what central banks are interested in, it's not about building a better currency system. It's about increasing the level of surveillance. It's about increasing the level of government's ability to track what's going on in the real economy. Some for noble purposes, but a lot that's probably more nefarious, especially with the Chinese and what they're attempting to do. They're essentially attempting to create a better monitoring system. So it's not about a better currency that's more useful to the economy in small e economic terms. It's about more of a better, what they hope is a more efficient or a much better top-down approach to using money as a means of control and a means of influence. And I don't think that's what most people think that, sorry, Emil, I don't think that's what most people have in mind when they think about a digital currency.
And I would draw a distinction between advanced economy money centers and central banks and emerging market central banks, which are much more central because the money they create is important to their local economies. In the world, no one is running to create yuan right now or some emerging market currency. The real money in making money is in these advanced economy money centers and currencies. So it's possible for a central bank to be a central bank and create money and control money supply and money demand more so in emerging markets. So maybe there, but for the advanced economy and for the global economy, which runs on Eurodollars, it's you need the private banks, at least the way the system's set up now, to buy in.
Literally.
Well, a little bit provocative question, but since you are used to it, I don't see a problem asking it. So how can we have a flourishing economy when the higher interest rate will inevitably cause a crash in the housing and stock market?
You want to take it, Emil? The easy
higher
answer.
Interest. You go ahead if you've got.
No, you take. We'll both. You go first. We'll both do this one.
A higher interest rate is not set by central banks. The central banks react to the market. The market sets a higher interest rate, and the higher interest rate represents greater return in the private economy. So the market would be saying, we are optimistic about the future. We believe you can make money in the real economy, and therefore these sovereign bonds, they better pay us a lot more, a higher interest rate, because why would we put our money in these safe liquid instruments when we can make real money in the economy? So higher interest rates would be something welcome. It would suggest the economy is expanding and growing and people can get jobs and wages are increasing. Jeff.
I think that's nothing more to add there. Just that, higher interest rates are normal. Higher interest rates are good. They're not bad. And even if transitioning from low rates to higher rates means that the housing sector falls off a little bit, so what? Because those higher interest rates represent, as Emil just said, the economy legitimately booming. So even if there are some interest rate sensitive sectors of the economy that maybe suffer a little bit in the transition to higher rates, overall the system is doing really well, so that it can easily absorb higher rates. In fact, it wants to absorb higher rates because, that, as Emil just said, that means the economy is generating all sorts of risk-adjusted, very good opportunities. That's what we want to see. So low rates are a sign that things are doing bad. high rates are, or at least nominally normal rates are a sign that things are going in the right direction. We want higher rates. We want interest rates to rise. We want the market to say things are going really well. We're now going to price our risk-adjusted opportunities according to all of these really good things going on. So that's really what we want to see. The higher rates are absolutely where we want to go.
The implicit assumption in that question is that the central authorities are setting rates, and perhaps they are in emerging markets. But what Jeff and our whole show is, no, it's in reverse. Yes, the central authorities set a rate, one of the money rates, but there are many others. And if you would weigh them all together, it's the market that determines the rates, and then the central authorities follow, even though they would never admit to that.
Okay, gentlemen, we've learned that the Eurodollar system is not the perfect one. It has its failures, it has its vulnerabilities, but there is a saying that even a bad system will always beat a good person. So in a sense...
I've never heard that. That's a good one.
In a sense, I think that we probably will end up with a scenario where if we are going to have the same conversation in 5 or 10 years from now, hopefully, we'll be still facing some of these vulnerabilities, but the system will be here to stay.
That's a fair conclusion.
Yeah. Yeah. In 5 years, yes, and we'll be sad and frightened. But in 10 years, also yes, probably, but we'll be optimistic and hopeful, and it will be, the worst will be behind us. Book it. That's a guarantee.
That's a message Emil and I want to send to most people, is that, you know, it sounds doom and gloom. It sounds awful. I mean, we're talking about depression, deflation, monetary breakdown, distance, all these bad things, but human nature has shown an incredible capacity to, number one, be stupid, but number two, wake itself up at the right time and fix these problems. Eventually it becomes, you know, eventually enough things go right. And eventually, you know, even if the Eurodollar system is still malfunctioning 10 years from now, I think what Emil was saying is that by then someone will have figured it out and will have a better idea of how to fix it. And once we do, I am absolutely convinced, I know Emil's probably even more optimistic than I am, once we do fix this monetary system, the future is incredibly bright, because we will have decades upon decades of unmet and unrequited demand and opportunity that's been pent up artificially, that will be all of a sudden let loose. Innovations that we haven't really taken advantage of because of this deglobalization and lack of economic growth, that it will all at once be set free. And I think what we're looking at, once we get the monetary answer correct, is an environment very much like maybe the 1950s, or even middle of the 19th century, where you just have a massive global wave of economic growth and prosperity. So if we do it right, there is an incredibly good future ahead of us. We just don't know when that will be.
And because there is another saying, I forgot who said this quote, but we should never underestimate human stupidity, both on personal and on collective level. Humans are prone to engage in self-destructive activities. And I suppose we can sum it up also for the Eurodollar system, the way you actually outlined it for us in the last 70 minutes, which now makes us even feel worse than before this 70 minutes.
That's the curse that we have. We're going to depress you as well as the monetary system.
Well, thank you very much for tuning in, for participating in this digital talk. I really do appreciate your insights, your analysis, your assessment, and I allow myself to invite you, not in 5 years, maybe in a year or so, to also discuss the developments regarding these and other systems, and specifically this kind of quite amazing cycle of global system transformation, where nobody, no matter if in your field or in my field, has an idea about the final outcome, which makes it so exciting.
I propose we do it in less than a year, and we do it on site in Vienna. I'm there.
Then
Or
we
in
can
India,
read,
right?
we can read all together the Raven of Zurich, because he has been based in Vienna, the author, and can also discuss the next stage of hopefully not another world war, but certainly the connections between the global financial monetary system and the connects to the political world. Thank you very much for being with me.
Thank you for having us, Velina. We really appreciate it.
The same.